Welcome to the Stock Market Morning Prep video for Friday, June 13th. Red across the board in all the five indices that we follow. Dow Jones down 109, NASDAQ down 34, S&P down 13, and a Russell down 7. Down about almost 0.75%. And, you know, the interesting enough, believe it or not, the move yesterday was not so overly worrisome, if that makes sense. There was really not a lot of fear in the markets, at least not yet. But yeah, I do like the fact that we did pull back just a little bit. Again, I'm not looking for a market crash. I'd like to see a little correction where this overbought reading in the markets and this fairly valued market as well can just come in a little bit so we can start nibbling at some good trades going into the summer. But I do see a market correction in the cards here. Remember, the reason why the markets have continued gone up is not only just because of the Fed, but there's really no catalyst to sell this market off. Now, you know, we always have a geopolitical event lingering in the marketplace, especially when you're getting into the Iraq and Kuwait and Iran and all of that. Something's always going on there, but it's when it really hits home and hits the headlines. And 2 days ago on Wednesday, there was almost basically a civil war breaking out, and Iraq asking for U.S. help, military help, and that actually spiked oil up. Now, I did mention yesterday about the oil trade. That when you have oil that really creeps up and starts to spike up, you have basically money coming out of the consumer's hands, and that's not a good sign. So what happens is, where do we go from here, and what are we looking at? Are we looking at a start of a top and a start of a sell-off? That's too early to tell. So what I would like to do is, take a list, make a watch list of stocks that are starting to break down. So when you do get that market sell-off, those are the stocks you want to go to looking for short trades. And then, of course, stocks that are holding up well in yesterday's sell-off, which really wasn't that much. Again, less than 0.75% is really not much to write home about. Those are the stocks you want to buy when the market does recover. And that's what I'm going to look to do. I do have, my targets that I was liking. I like the transportation sector going into a short trade. And the FedExes, the UPX, some of the railways, some of the truckers, and even the index, the IYT, if you had to. It's a little bit of a slow mover, but it's just not a friendly way to trade. But you can trade the ETF if need be. So I'm looking at a few ideas going into next week. Today is Friday the 13th. So does that put any meaningful maybe another sell-off today? I don't know, but what I do think is that today is Friday, and usually Friday in the summer months generally is light volume, which tends to move the markets higher. But with the fact, with the geopolitical tensions rising in Iraq, I don't know if that's another decision to say, hey, I'm not going to hold a lot of long exposures going into the weekend, so let me sell some more. That could happen. So it's a toss-up because the markets are doing nothing. We're basically flat here going into the U.S. Open. So we'll just have to see. But I do like that the markets are a little flat so that we can start developing some trade ideas. When the markets are down 20, 30 handles, and that's an extreme, but even down 5, 6, and then the market opens and then sells off again, it's really hard to get short. But if the markets stay kind of where it was on the close, and we get a little bit of a pop and then we fail, that's going to be even better. Okay, so let's go take a look and see what we have. Japanese yen, it was looking interesting that we were really starting to break down, but we did catch that lower trend line area of support, that uptrend line, and we had a nice bounce for the last several days. We are down a little bit, so we have this fib cluster that's been really with us for the last several months. Now, this here needs to break out, and then, of course, we're going to have to take out that 200. But if that does happen, then we should see some continued market weakness. Now, remember, though, Bank of Japan spoke and talked down its yen, saying that they're going to do whatever it takes to keep the yen lower. So it's going to be a big market fight between the bank and the BOJ and, of course, the market participants and seeing what they want to do. I've seen the yen Really, whatever the Bank of Japan did, at one point, I think it was a few years back, it just exploded to the upside. It didn't matter. When you get fear into the marketplace, it doesn't matter. So just keep that in mind, okay? But again, let's let price tell us what to do. We also have bonds actually had a nice recovery off the 200, and now it's back above the area here of resistance. And looking at that 1272 extension would be that new target. Well, the old target being new again, and then of course that 1618 would come up here. I think it actually at one point is going to get there. Remember guys, we haven't had a 5% correction in months and months, and a 10% in over, I think, almost 780 trading days, something like that, something crazy, well over 2 years. And that's not really healthy, so it's something interesting to see if bonds continue to move higher. I think bonds are in a short squeeze. I think bonds are going to move higher before they move lower. I do think that they eventually will revert back and start selling off again, but not until we get a pretty decent rally to the upside. Now let's take a look at our indexes. I like the fact that we did pull back a little bit here. We did hit that 1618, and that's when I said be very careful. We're at the double extension, which this surprised me here, taking out the 1272, being up for 14 trading days, and now we're back above the 1272, which actually will be acting as support along the 20-day. I'd like to see the market hit that 200 right around here, around the 1892, even call it 1900. Which is just a little bit above that, just below that 50-day moving average. As you can see, distribution increases in volume, so we had a meaningful sell-off. Now, on the 1-hour chart, that 38% retracement, at 50 or the 61%, 50 and the 61.8 comes in at 1895 to 1906. So even that round lot number, that's the two areas where I would be looking for a decent pullback. I think that would get us right around 5%, where we usually are. Give or take, where if you looked at a daily or even a weekly, you measured, most retracements were about 5%. Okay, now the transports, first move was the 20, we broke right through it, and we are now sitting just above the 50. I think the transports can move much lower, especially when we had that primary the other day, and they were talking about how now if there's a change of tide, spending is going to be, we're going to go through a lot of spending cuts, and obviously the transports is going to really take effect here, as well as oil. Remember, if oil rises, it's going to hit hard with the transportation sector, that being, of course, the airlines, the truckers, rails. So, that's going to be a big hit, and if we continue to stay elevated at crude oil at 107, 110, if we take out 108, I think you're going to see 115 easy. And that's going to really affect the transports. And that's why I like that. There is a catalyst involved in the transportation sector. Again, dial into that. Look for the whole top 5, top 10 holdings and look to trade it, because it totally is overextended and is ready for a move lower, I believe. Now, we did have this huge volume here, as you can see. So, maybe we get a little bit of a bounce today. Maybe into tomorrow, but as long as crude oil is holding up, I think the transports, people are going to start taking profits in the transportation sector, and that's going to be a decent trade. Okay, IWM, same here as well. We have the 61.8% retracement. That's usually an area where we mark a reversal, and I'm looking for the IWM to come back really down to about 113, 113 and a half, and then we would reevaluate it. And lastly is the Qs. Qs held up pretty well. We did have some of the higher beta names. Yeah, they were taken to the woodshed, but some of the handful of the Qs did okay. Intel reported their preliminary results, and that was up, I think, over $1. So let's see if the semiconductor, sector will catch a little bit of a bid. That'll probably help the market today. But remember, I think anything goes today. I really think you can't assume that, it's Friday, the market's going to get bid up. Well, yeah, that could be one way. But with yesterday's sell-off coming into a weekend with oil rising and the geopolitical tensions escalating, I think you have to be careful and cautious that, hey, I think maybe we might want to start, lighten up the long side of our book. Okay, so just use a little caution here. But remember, have both sides ready, because when the markets do rally, you want the stocks that are holding up well in any type of sell-off. Those are the stocks you want to go to, as they will rally harder, as well as stocks that are starting to fall really to the waistline. When we get some continued selling, those are the stocks you want to be in short. All right. Have a great weekend, everybody. We'll speak to you on Monday morning. Take care.